Good morning. Welcome to the Forex Pro Charts weekly analysis for the week beginning November 28th, 2010. This week we are going to be looking at the dollar yen or the USD JPY, the UJ pair. We start by looking at the monthly time period chart for the UJ, and as you can see on this chart that the UJ has been in a strong downtrend since it reached this monthly high six or so months ago, and has been trended strongly down ever since until it reached this bottom edge of our trading field, or came close to reaching the bottom edge of our trading field within 100 pips or so, and then reversed back up. Now this candle here is red because that's a volume indicator. On our charts, the blue and red candles are volume indicators, and you can tell the difference because they're not outlined in black. So if we did not have the volume indicators on our charts, this would be a green candle, and you'll be able to see that on the weekly time period. You'll be able to see a series of green candles, but on this time period it shows as red because of the high volume involved in those trades. So it is looking like price did indeed reverse in this area, and may well be heading back up to some of these highs. Of course, it could always reverse and move back down, and if it does, then we'll be looking to see whether it continues through this outer edge of our trading field and continues down, or whether it retraces again and then reverses. So basically, actually, we would be at this point looking to see stronger price moves on our buys, because we think that price possibly has reversed and is going to be moving up. But we will be using caution in taking any trades where we're looking for a large price move. Also, if you'll notice, or if you'll remember, if you have been with us on the UJ trades, we did have an extremely large zone for quite some time until price made this reversal, because the zone was 400 or so pips. We were unable to trade it. So we just now have gotten some zones in that we've been able to trade, and we're able to start taking trades on the UJ again. Let's go ahead and take a look at the weekly time period. Okay, looking at the weekly time period, then you can see where the candles, as I told you, where they show up, it shows up as a red high volume candle on the monthly chart. And when you move to the weekly time period, you can see that indeed it's a series of 4 strong red candles, which reversed here and formed a new support zone, and then moved all the way up through this fairly new resistance zone that had formed, and through the weekly armpit. We normally see a little bit of a bounce at the weekly armpit, and when we get to the daily charts, we'll look and see whether or not we had a bounce there. But for the week, price moved up and through, and appears to be heading up here towards this monthly armpit and this small zone right under the monthly armpit. Now, when you look at the weekly zone, you know that generally we're looking to see a rally-based drop pattern for our resistance zones, and at first glance it looks like we don't have that. But if you look a little bit closer, you can see price was coming here, then it rallied, base, and drop. So we did have somewhat of a rally-based drop pattern. It's really not maybe as strong as we like to see. We like to see a little bit more of a pattern like this, where it's very clear, to add strength, but combined to the fact that it is right at the monthly armpit, which could provide some resistance to price on the way back up. And because this particular zone is so small and so well distanced from these other zones, then this looks like it could be a nice zone for taking some trades if price goes there this week. Then as we move up, if price moves up through, you'll see we're hitting a couple of zones that are fairly close to each other, although they also have a nice positioning of the 60-minute armpit, so that we have a very low risk in those. I would be surprised if price reached either of these 2 zones this week, so I'm not going to talk about them a whole lot, but it's possible that price could reach this zone. You see that because the zone is so small, even though the 60-minute armpit is fairly close to the daily armpit, the total risk is low because of the small size of the zone. So we would be taking a trade on this 60-minute armpit if price does indeed move to this level. If price turns and retraces at this level, then it will be moving down to this support zone here. And again, we have a nice position on the 60-minute armpit, that it is fairly low in the zone. We'd be a little bit happier if the bottom of this zone coincided a little bit more closely with this solid edge of our trading field. But this should be a fairly low risk trade, and we should be able to take that if price were to come back and see a bounce at that point. Okay, so let's look at the daily time period chart, and you can see where price was moving down from the monthly armpit and moved really very, very steadily down. This also, as you know, we like to look at how price moved out of a zone, and also to a lesser extent how it moved into the zone. Price moved very strongly into this zone, did not stay very long, and then moved very strongly out of the zone with really very little retracement. Started to kind of consolidate a little bit right here before it moved down and finally reversed, but really a very nice strong couple of days move out of the zone, and then a continuing strong move out of the zone before price moved back up. So this is really going to be a very nice zone if price moves up to here. And looks like the 60-minute armpit is about 85.75. The monthly armpit is at 85.98, so right around that 8600 psychological barrier. With the monthly armpit, the small zone, you're looking at about a 25 pip risk plus the cushions that you put in, and this zone should be a very nice trade because of how price has moved in and out of at the origination of the zone. And because price still technically is in a downtrend on the monthly and weekly, then a sell would be the appropriate trade to take. Although again, we're using a little bit of caution in that because we feel that price may have reversed, and we may be seeing the very beginning of an uptrend right here. But all in all, the position of this zone, the size, and the chart patterns make this look like an excellent zone to trade for this upcoming week, and we'll be watching closely to see when price begins to reach this zone. Let's go ahead and let's go back and talk about this support zone here. Again, if price does not reach, or when it reaches and moves back down, this is the only support zone that we have on the chart because it is so close to the outer edge of the trading field, and we don't have any zones below that at this time. If price does move down, we do see that the 60-minute armpit is at 80.38, and the end of the zone is 10 or 15, maybe 20 pips below that. Again, complicated a little bit by the fact that we have the trading field here, and price could conceivably spike down to that area, but your risk is really going to be very little. And again, this should also be a trade, and we have seen where price moved nicely down and back up, and this was of course also a drop base rally pattern on our weekly chart as well as here on the daily chart. Okay, so now we're looking at the hourly chart, and we like to look at price action a little bit more closely for the week. Now over here you can see where price, this is the area where price last week had hit the 60-minute armpit and actually moved up to the 5-minute armpit and then moved back down, and we had a trade there. Then we see that price really didn't move out of the zone at all before, and it just hung around this 60-minute armpit, then moved up to the 5-minute armpit and took a nice bounce here, then moving back up to the 60-minute armpit where it did bounce a little bit. But if you remember, once price hits that 60-minute armpit and we take that trade, then we do not take the additional trades if we want to be conservative, successful traders. as price moves back up to the 60-minute armpit. Now, if price had moved all the way back down to another zone and then back up, that would make it a different story. But where price is just kind of hanging around this zone on an hourly basis and not making any strong moves in, above or through the zone or below the zone, then we do not trade these again. Now, of course, at this point, price has moved up through this zone, and even if it turns and retraces, this zone is dead. We'll wait for a new zone to be formed on the daily chart, but this zone will be dead for any additional trading because price has moved out of the zone and actually does look indeed like it's going to be continuing up. So again, we've crosshatched this zone, left it on our charts to look at price movement, and we will be taking it off of our charts next week. So this is the this is the weekly analysis for the week of November the 28th, 2010. We looked at the UJ pair. For more information or to subscribe to our full analysis and charting services, we provide a written analysis of 10 major currency pairs every week, as well as alerts and trade alerts for our enhanced and premium subscribers. You can get more information on our service and get access to a free one-week demo by going to www.forexprocharts.com. Thanks for joining us, and we look forward to seeing you next week.